Welcome back to Money Wise Smart. Today we're going to be talking about Upwork's fourth quarter earnings, which the company reported on February 10th, 2022. Looking at the fourth quarter earnings result, the company reported record quarterly and annual revenues and gross profits on an absolute basis. The company also was able to pull forward their long-term growth targets by a full year. However, the company continues to invest aggressively in the continued growth. And while management remains bullish on the long-term outlook for their marketplace, this increased spending has weighed heavily on the stock. Starting off looking at user trends, gross service volumes increased by 35% to $980 million during the quarter. The company also saw the number of active clients grow 22% to over 770,000 in the period. Growth from large clients spending more than $1 million on the platform over the last year is up a whopping 61% and now represents 108 clients in this level. And enterprise clients, which has been a key focus point for the company, increased by 78%. While still a relatively small part of the business at this point, it's going to become a much more meaningful contributor quickly. Finally, gross service volume per active client grew 15%. to $4,600. Looking at revenue growth, revenue grew by 29%, which is lower than the GSV growth of 35%. However, this growth was aided by both marketplace revenue growth and managed services growth. The lower revenue growth relative to GSV is due to the lower overall take rate. As the company continues to exceed milestones from a revenue standpoint and contribute solid growth, management remains confident in their ability to meet the $1 billion revenues target. And the performance at this point has been ahead of plan, which gives them comfort in pulling forward that $1 billion target from 2025 to 2024, only 6 months after issuing that guidance. As for take rate, we expected this to remain under pressure, and that happens to be the case for the fourth quarter. The take rate fell 60 basis points year over year to 14%. Which was also down 20 basis points quarter over quarter. The reason for this is because the faster marketplace top line growth compared to managed services represents a mixed headwind to take rate. Additionally, the marketplace take rate over time should continue to fall. This is because as freelancers grow longer term relationships with clients, the amount of take on those individual projects drops from 20% to 5% over time. These two headwinds should continue to represent pressure on the take rate going forward. However, management believes that new initiatives that they've launched, such as these enterprise relationships, the project catalog, and Talent Scout, could represent a tailwind to help offset some of the prior points. And a helpful move from the company, Upwork disclosed metrics around enterprise clients for the first time this quarter. The revenue contribution from this group was just over $10 million, which represents less than 8% of sales. Revenue for this group grew 64% year over year, and management announced a target to achieve over $300 million of enterprise revenues by 2025. If they're able to achieve this goal, this would be a 10 times growth from the 2021 level, and represents 71% annual growth over the next 4 years. Gross margins continue to be impressive and hold stable around 73%. Fourth quarter margins were 72.9%. At MoneyWise Smart, we do deep dive research into high quality companies that we look at as great long-term investments. Some of the work we have done is available for free on our website as part of our free research series. You can check that out at the link below. We aim to help you learn to compound your wealth. If you enjoyed this video, please click the like button and subscribe to our page. And we'll be back with another video soon.